how can I invest and own multifamily passively? How is that possible? But there's really only a couple of ways to be passively, I mean truly a passive investor when it comes to multifamily. And here they are. Okay, number one is an REIT, or a REIT, Real Estate Investment Trust. Okay, Real Estate Investment Trust. This is passively owning, you basically own stock in a real estate company that invests in real estate, and it can be any kind of real estate. So you're basically just owning stock in the company, and then the people in that company obviously are doing all of the work necessary in order to make the real estate go, okay? That's typically it. So you own stock and you sit back and you get your reports once a month, you get your maybe it's a dividend check, maybe it's not, depending on how well the real estate investment trust is doing. But that's basically it. Here's money, I get stock in the real estate company, I'm pretty much passive, that's it. No one's calling you about maintenance, repair, no one's even calling you or talking to you about really even any administrative things. You're pretty much passive, okay? So that's number one, as a real estate investment trust. Again, you're not an active owner, you're passive, but you're only getting the benefits of owning stock in a company. That's it, okay? That's number one. Number two is a DST, or a Delaware Statutory Trust. Now, I'm not going to get into the weeds on this, but this is mainly for real estate investors doing what's called a tax-deferred exchange. So they sell their real estate, they've got a large amount of capital gain, they move those proceeds into this trust that owns real estate. And again, they're pretty much passive after that happens at that point. There might be monthly statements, there might be quarterly statements, there might be conference calls if they want to get on them. But that's basically it. Okay, so when it comes to being ultimately passive as a real estate investor owner, especially when it comes to multifamily, real estate investment trust, DST, or Delaware Statutory Trust. That's it. That's it. So I know you're probably thinking, at least in the back of your mind, or a conversation that's going on is, well, Darin, what if I own multifamily property and I have a property management company managing it and taking care of it? I mean, that's passive. Or you might be saying, hey, Darin, I'm part of a real estate syndication. And part of what, the sponsor or the general partner is telling me is, you invest in this real estate syndication and you're pretty much passive. You get to do what you do best in terms of being whatever, doctor, physician, business owner, entrepreneur, sales leader, founder, whatever it is. You get to be able to do that and do what you do best. And then that sponsor and that general partner is really running that real estate investment, especially with what we're talking about here, multifamily. Now, you'd be partially right about that. Partially. Okay, so I'm going to give you the 80% here, 80% rule. You're 80% right with what I just said. Now, what do you mean 80%, Darin? What are you talking about? Let's hit the low-hanging fruit first. Let's talk about, let's say you own some multifamily real estate, whatever it is, duplex, fourplex, maybe it's a 24-unit, 72-unit, whatever it is, and you have a management company manage the property, okay? If you think that you're going to be totally passive in that regard, and maybe this is something you're thinking about. Maybe you're thinking, maybe what I'll invest in is I'll invest in my own and have a management company. That way I'm out of it, I'm passive. No. In that regard, my friend, you are never passive. You are never passive.
What do you mean, Darin? I'm not managing it. I'm not doing the day-to-day. I'm not taking the calls. I'm not doing the maintenance.
You're right. You're not. However, the thing that you don't want to ever do is this. You never want to abdicate responsibility. This is huge. Abdicate responsibility.
So what does that mean?
That basically means that, okay, it's up to you to make sure everything goes right and just kind of keep me posted. By the way, don't even really call me. I don't really want to be bothered because I'm pretty much putting the responsibility of the investment on you. I'm abdicating the responsibility of this investment, i.e. multifamily property, performing the way it should be performing on you. I'm going to say it again. I'm going to sound like I'm repeating myself. I'm abdicating the responsibility of the investment that I'm making, even though it's my investment, even though I'm the one making the investment, I'm abdicating its performance, how well it does or how well it doesn't do on you. Bad idea, bad idea, especially when it comes to property management companies. Because let me ask you a question. Sure, there are differences in management companies. There are differences in how good they are and how bad they are. But does a management company have a financial interest in that investment and how well it does, in how well the property cash flows, in how well the property grows in value, in how well the property does over time for you? The answer is no, they don't. Other than having a management fee that they'll probably collect, like a percentage maybe of income and maybe some transactions that are there, they don't have a financial interest in how well that property does for you. Most people get this screwed up. They think if they abdicate, okay, here, responsibility management company, you take the responsibility of all this, that they have your best investment interest in mind, and at the end of the day, they don't. Now, is that to say, Darin, that they're not even aligned with me at all, or they don't want the property to do well, or they're maybe avoiding being really good managers and agents of what I'm doing? The answer is no. In most cases, they're probably doing the best that they can do. But let me ask you a question. How well will you do when you have a financial interest in something, especially when it's a significant financial interest, versus when you don't? Pretty easy. It's pretty easy, right? They don't have to deal with lenders. They don't have to deal with capital calls. They don't have to deal with property taxes going up. They don't have to deal with your insurance premiums going. They don't have to, you see what I mean? Okay, so the worst thing you can do is abdicate responsibility to a management company because you think it's a passive way to invest in real estate, especially multifamily. Bad idea. Now, am I saying that you don't do this at all? No. What I am saying is you don't abdicate. If you plan on going down that road, you better expect to not be what? Passive. You can't be truly passive. You need to be having meetings with your management company. You need to be having you need to be having them giving you the KPIs that are going on. How well are the property doing? What's our occupancy? How are our collections doing? How are we doing on saving on our utility costs? How are we doing in our turnover? How long is it taking to turn units over from being available to being rented? You see, and I could go on and on and on. At the end of the day, you got to have some kind of process where you're not abdicating all responsibility. You are, by the way, aren't passive. You don't have to be in there doing the maintenance, and you don't have to be in there showing units to lease, but you better damn well be having conversations with your management company about those important KPIs, and you better have it scheduled. Is it every 2 weeks? Is it once a month? Minimum of once a month. What kind of information are they getting to me? Because if you go beyond that in terms of, don't even bother me. I mean, just take care of the property, and, if there's like a major problem, but don't even bother. You are abdicating and you're asking for big financial trouble. And I'll tell you, the biggest reason why many multifamily investors fail when they get into multifamily real estate is because they abdicate the responsibility to a management company, and they take a total step back, and they think this is a passive deal when at the end of the day, guys, it can't be totally passive. You've got to be involved. And if you don't, you're going to pay a financial price for it. Okay, so that's part one. And then here's the other one. Remember I mentioned real estate syndications as a way of being passive. I'll just write RE syndications, okay? And you probably know where I'm going with this. And so we operate a number of real estate syndications. We have a fund. So we have over 100 partners that we deal with and that we are aligned with in terms of our multifamily real estate here in Iowa, okay? And here's what I can tell you about that. The worst thing that they can be, all of my partners, again, is be in the position of totally what? Abdicating responsibility to me. Now look, it's convenient to do that. And it's actually, it's kind of strategic in a way, because think about it. If their multifamily investments don't do well, okay, so they invest with me, they invest with us in our funds and our syndications here in Iowa, and let's say they don't do well. Who gets the blame? Who gets the fingers pointed at? Me. That's right. So it's my fault. Is it their fault? No, it's not their fault. It's because of me. So there's a little bit of an abdication of responsibility. It's not my fault. It's Darin's fault if this thing doesn't go very well and the property doesn't do well or a fund doesn't do well. It's his fault, not mine. And there's a little bit of a break you get as an investor when you do that. Okay, fine. But even though that may be the case, the worst thing you can do is totally abdicate it. You better be looking at the reports that we're sending you. Okay, you better be looking at those important KPIs as we're getting that information sent out to you. You better be looking over the balance sheets. You better be looking over those estimates of value. You better be looking over the appraisal information. You better be looking over the profit and loss statements. You better be looking over that K1 tax return information that you better be looking that over and not be totally passive and totally abdicating. Yeah, you're getting involved with us because you want to, just like what I mentioned before, you want to do what you do best. You want to be the best attorney you can be. You want to be the best entrepreneur you can be. You want to be the best physician. You want to be the best founder, the best, whatever it is. You want to be the best at that you can be while your money is invested and working overtime in real estate with the benefits that a good multifamily investment can give you. Great. But here's the deal. You cannot abdicate that. You can't abdicate that totally to me. You better damn well be keeping me accountable. You can't be totally passive. There's no such thing, even in a real estate syndication, that you're totally passive. Look, you don't want to be one of these investors that, for example, calls me, I don't hear from you, I don't really know what's going on with you, 4 years down the road, and you say,
Hey Darin, it's been 4 years. How are things going? What's going on? How's my investment doing?
No, you don't want to be that guy. Okay? You don't want to be that guy. You want to be, hey, Darin, I've been looking over the monthly reports I've been looking over the quarterly reports and kind of seeing the balance sheet and seeing where maybe the appraisals are going. Kind of give me a sense of what's going on out there in the market right now. What are some opportunities that we should be looking at? Are we passing up any opportunities right now in terms of what's going on? Is there anything that we need to do in terms of our debt? What kind of debt are we looking at? Do we have some refinancings coming? You see what I mean? I could go on. And not that you have to have a laundry list of things, but guys, you can't totally be passive because you want to know what's going on in a proactive way to be able to make the most informed decisions that you can make. Whether it's, hey man, everything's great, everything's going well, just continue doing what you're doing. Appreciate what's going on, thank you very much. Okay, we'll talk to you next quarter, we'll talk to you end of the year, whatever it is. Or it's, hey Darin, I noticed a few things here. Give me an idea what the heck's going on here and what's happening, just so I have a better sense of what's going on. Why? Because you don't want to be totally passive. So guys, please understand that yes, you can invest in real estate passively. That's definitely the case. And you can be very successful as an investor in owning, tens of millions of dollars, especially multifamily, if you want to be. But the one thing you can't do is abdicate total responsibility. You can't be totally passive. You've got to be involved. If it's either directly, if you're your own owner operator doing your thing and you've got a management company involved, we talked about that, or even in a real estate syndication where you're just one of many partners that might be involved in it, and you're not turning any screws, you're not showing any units, you're not taking any prospective resident phone calls, but you're not abdicating everything totally either and keeping things accountable. Okay, so look, make sure you understand that as long as this is your foundation going into whether it's your first real estate investment or your next real estate investment, especially if it's multifamily, you don't want to truly be passive, even though it sounds great, sounds wonderful, right? And you don't want to abdicate that responsibility. Okay, look, I hope that what I've shared with you during our time together has resonated with you and is going to build a good foundation for where you're going to go to from here with your next multifamily investment. And if you have any comments, would love to hear from you. So click that subscribe button if what we've talked about here resonated with you. And let's continue to have that kind of dialogue, especially when it comes to not being totally passive and not abdicating that responsibility. All right, take care. We'll see you. All right, bye-bye. If you want to get your hands on more great multifamily real estate content, make sure you click here. If you want to invest passively in great multifamily real estate, make sure you click here.